What's interesting about SAP is that its profitability is not as high as you would think it should be. My name is Andrew Stotz, and let's get into this valuation masterclass case study. First, let's start with the company background. Have you seen SAP somewhere? Well, job qualifications, SAP shown as a skill in LinkedIn, training programs. I mean, SAP is everywhere. SAP job roles in areas such as accounting, HR, business analysis. In fact, I was just talking with a business, two different businesses that were medium-sized businesses that have started implementing SAP. So what is it? It's a German firm that produces and sells software to manage companies. The core offering is an ERP software, and SAP stands for System, Applications, and Products in Data Processing. Not really the most sexy name, but anyways, the SAP's got about 24,000 global partners and worldwide locations across 130 countries. 99 of the 100 largest companies in the world are SAP customers. I mean, that's the ultimate endorsement right there. It's the only German software in the Dow Jones Sustainability Index. And they've got 280 million subscribers in its cloud user base. So what is an ERP? Well, software that helps companies run their business easier by centralized platform for real-time data and information. And they enhance efficiency. They streamline operations and improve communications across different departments within an organization. Generally, companies get these when they move into mid-size. Now, they've got an SAP cloud offerings that are IT administrators, software developers, and end users. These are the structures of what they have. And basically, you can get a picture of this. So infrastructure as a service, firms can use this from providers like Amazon or AWS or Azure by Microsoft to host SAP applications, databases, and related infrastructure. And then you've got SAP HANA Enterprise Cloud. And platform as a service enables users to build, deploy, and manage applications in the cloud. And then there's software as a service, which is fully managed in memory cloud database. It's integrating enterprise data for faster decisions based on live data. So let's look at the revenue breakdown. 41% comes from cloud, 39% comes from software to support. I mean, you can't implement SAP without software support. And then we have software license and services. So cloud revenue was the main growth driver and in 2022, and it was up by 33%. And cloud revenue comes down to 80% software as a service and 13% platform as a service and 7% infrastructure as a service. Now, if we look at the regions, we can see that 43% of revenue comes from Americas and 81% of that is the US. And then you've got Brazil, Canada, Mexico. And then we have Europe, Middle East, and Africa, where Germany, of course, is the biggest player, as well as France, Italy, Netherlands, Switzerland, and UK that are implementing it. And then you've got Asia, Pacific, and Japan being one of the main implementers at 28% of the total 7%. In addition, you've got Australia, China, and India. So what are some companies that implement it? Well, every big company that you know. So what is the competitive strategy of the business? Well, the business was founded in 1972, and it's got about 100,000 employees and about $30 billion in revenue. Its main products are SAP S/4HANA Business Technology Platform and Signa Vio. And what is its competitive advantage? Well, it comes through integration and standardization of business processes, a global presence, integrated solutions, diverse industry experience, and a strong brand reputation. It's really known as number one. So how did it achieve this? Well, by providing integrative enterprise resource planning solutions that standardize and streamline business operations. Who doesn't want that? And a platform as a service offering that supports customer or custom development. Of course, the network of implementers is a huge part of the success of SAP. So let's look at some evolution from a small startup to a global giant. It was founded in 1972 by 5 ex-IBM employees aimed to develop a standard software for real-time business processing. The first financial accounting system launched in 1973, and it enabled real-time data access. So companies that close their books on a daily basis are using something like SAP. And then they had released R-3 in 1992, and it was a significant shift contributed to SAP's widespread adoption by large enterprises. And then in 2000, they introduced mysap.com, which enhanced integration with web-based access to SAP applications. And then they had the acquisition of Business Objects in 2007, which expanded SAP's product portfolio to include business intelligence and analytics. And then there was a transition to cloud computing, offering cloud-based solutions, reducing costs and improving scalability. So they now are the number one supply chain management software vendor in 2021 and probably still today. Number two in enterprise application software, and number two global ERP market share, the key player in the ERP cloud market. So the global trends, well, global ERP software market size expected to reach $123 billion by 2030 from just $50 billion in 2021. And cloud ERP market size is valued at about $130 billion. Americas is the largest contributor in the market share and generates a large part of SAP's revenue. And global software as a service market value is projected to grow at about 19% CAGR. And that revenue was 80% of SAP's cloud revenue in 2022. So what's interesting about SAP, I said at the beginning, is that its profitability is not as high as you'd think. Here I've put SAP's, the blue lines, ROE, and compare that to developed market infotech companies. And what you can see is that the ROE is considerably below. And in fact, tech companies have been expanding their ROEs massively, particularly in the US. Now, it's not a perfect comparable. There's things in this space in developed infotech that aren't perfectly comparable to SAP, but still, I would have thought that it would have had a massive ROE. What's the latest news? Well, in fact, they have had a pretty great run here. SAP reported third quarter earnings up about 43%. And the 9-month result was about 86% of our full year forecast that I'll show you. And in the news, SAP is weaving the Gen AI thread into their solutions, like everybody else, starting to bring AI into the software. So let's look at the company. Is the company financially world-class? Well, this is the method that I use as an investor and business owner to measure whether a company has a competitive advantage. It's called the World-Class Benchmarking Scorecard that we developed about 10 years ago. And here's how I construct a scorecard for any company. First, we gather the yearly and quarterly data of 26,000 companies worldwide. We then calculate each company's profitable growth score, which is a composite measure of both profitability and growth. After that, we rank the subject company relative to sector peers of a similar size. A decile ranking of 1 is best. And if it scores a 1 or a 2, then I would say it's financially world-class. And we assess the company's performance over the prior 4 years and the past 12 months. So, is SAP financially world-class? Well, when we compare it against 670 large infotech companies, what we're going to find is that no, it is not financially world-class. The best that it got in 2019 and 2020 was a ranking of 3. And it's deteriorated in 2021 and 2022, though bouncing back in the past 12 months. Is your company financially world-class? Just message me and I'll score your company. But let's wrap up by looking at valuation. Here we can see the free cash flow estimates that I've made for the company and my cost of capital and cost of equity, about 9% for cost of equity and about 8% for cost of capital. And still, despite those relatively low discount rates, I would say the stock is still, the red bar shows it's not yet, the price is considerably higher than the value. And finally, let's look at the multiple valuation. The company's trading on a 42 times PE ratio, which is double Germany and a little bit less than double the world. And it's got growth. Yes, in 2003, it's had a fantastic growth, but forecasted about 18%. I wouldn't say it's a standout on growth, so that PE is pretty expensive. If we look at the price to book, what we can see is 3.9 times price to book. and the ROE is just a paltry 5, 6, 10%, you can see it's probably overvalued on a multiple valuation perspective too. So what is your company worth? Just message me and let's discuss the value of your company.